This is Matthew Kratter's Bitcoin University. Today I want to talk about recycling trade surpluses into Bitcoin. We have this classic trade surplus recycling is what it's called, and this has been going on since about 2001 when China joined the WTO, the World Trade Organization. And the way this works is this: the US buys more goods and services from China, imports more goods and services from China than China buys from the US. And that ends up leaving China with a surplus of US dollars. In other words, they have a trade surplus with the US, as we say, and the US has the inverse, a trade deficit with China. Now, if China dumped these US dollars for Chinese yuan, it would cause the yuan to appreciate against the US dollar and make Chinese exports to the US more expensive, which China doesn't want. So instead, China has traditionally taken those US dollars and used them to buy US government debt, which are called treasuries. We can see a chart of this, how this really took off in the early 2000s after China joined the WTO, and then it really peaked shortly after the great financial crisis. It peaked in approximately 2014, and then since then, China has been buying fewer treasuries and letting the ones on their balance sheet roll off. This peak occurred, as we said, in the years following the great financial crisis, when China realized that the US was willing to destroy the purchasing power of its currency with QE, with quantitative easing, in other words, with printing money and buying bonds, in order to make sure that the US bankers got their bonuses and the US military got its $10,000 toilet covers. And so China wanted no part of this, and as a result, since then, China has been purchasing fewer treasuries and more assets that are better hedges against debasement, like stocks, real estate, more physical gold, all of which are better stores of value, better inflation hedges, better hedges against currency debasement than treasuries are. And also China's been, of course, buying global strategic assets like mines and harbors and airports and things like this in order to wield more geopolitical influence. This is the so-called Belt and Road Initiative, which started at the same time, 2013, 2014, when China began to shift away from US Treasuries. If you're finding this video helpful so far, I just ask you to help to support this channel's educational mission. Hit the subscribe button. That does really help. Leave a like, leave a comment, question, suggestion for a future video. Share this video with a friend or family member. Now, wealthy people around the world and nation states have also been increasingly turning to US stocks and away from US Treasuries as a store of value. It makes much more sense to hold US stocks rather than US Treasuries with your US dollars if you're going to be forced, or if you want to hold US dollars from a purchasing power perspective, as we've said. And we can see this really taking off. The blue line here is foreign direct investment in US equities, in US stocks. And then the sort of red line is the NASDAQ 100, which is going to become relevant in a moment to our discussion. If we scroll in here, we can see how it really went vertical in beginning in 2018, the rate of foreign direct investment into U.S. stocks. And the NASDAQ and the S&P have obviously been huge beneficiaries of this, especially the large tech stocks. Now, how does this all relate to Bitcoin? Well, to begin with, one of the largest tech stocks, Tesla, has owned Bitcoin and been a part of the QQQ for years. And now more recently, on the 23rd of December, 2024, MicroStrategy was added to the QQQs. It currently has a 0.34% weighting in the index. And again, the NASDAQ 100, the QQQs is just 100 NASDAQ stocks, the largest and most important, essentially. And because of this weighting, for every $1 billion that flows into the NDX, the NASDAQ 100, the QQQs, which is the ETF for the NASDAQ 100, for every $1 billion that flows into the QQQs, $3.4 million of MicroStrategy stock gets automatically purchased because they have that 0.34% weighting at the moment in the index. And so MicroStrategy benefits from passive flows into stock indices like the NASDAQ and not yet the S&P, but once they're added to the S&P, then they'll benefit from that as well. And so as MicroStrategy benefits from passive flows into stock indices like the NASDAQ 100, I believe it's also in the Russell 3000, that enables MicroStrategy to issue more convertible bonds, more stock, and soon more preferred stock as well. Michael Saylor announced a couple days ago that MicroStrategy is now going to be raising more money using perpetual preferred stock, which is basically a senior form of stock that's below bonds but above common equity in the capital structure. And then MicroStrategy uses the proceeds from these bond and stock offerings to buy more Bitcoin, thereby helping to drive up the price of Bitcoin, which in turn increases the valuation and market cap of MicroStrategy, as has been happening for the past 4 years, allowing MicroStrategy to climb the ranks of the 100 stocks in the NASDAQ 100. Now imagine what happens when MicroStrategy, as we said, is added to the S&P 500. Imagine when Tesla buys more Bitcoin. Imagine when Microsoft, Apple, Amazon, Google, Facebook, Meta eventually and finally put Bitcoin on their balance sheets. We already discussed this a little bit in a previous video talking about the insane Bitcoin MicroStrategy QQQ feedback loop, where companies like MicroStrategy get added to stock market indices, which enables passive stock index flows to flow into Bitcoin itself. And then as more companies add Bitcoin to their balance sheet, it pumps Bitcoin, which pumps the stocks of these companies, increasing their weightings in the indices, and thus leading to even more capital flowing into Bitcoin. And this dynamic of passive flows is increasingly becoming more and more important. But what we didn't talk about in that previous video was this, that the NASDAQ 100 will be full of companies buying Bitcoin and receiving passive flows, not just from passive ETF and stock index investors, but also, more importantly, from nation states like China that are using their US dollar trade surpluses to buy the NASDAQ 100 and the S&P 500. Here's the stunning result. Global trade surpluses will be flowing indirectly into Bitcoin via the balance sheets of companies in these indices. Again, China is using stocks here, leaning toward using stocks more than using government bonds or treasuries. And the stocks that it's leaning towards, these will always be fairly index plays. And to the extent those companies that have Bitcoin on their balance sheets will basically have global trade surpluses being settled into Bitcoin. And the more inflows into Bitcoin, the larger Bitcoin's market cap becomes. And as its market cap increases, Bitcoin becomes increasingly able to service things on the scale of the global economy. And in this way, trade surplus flows from all countries into US stocks will increasingly be moving the world onto a global Bitcoin standard. The world is rapidly moving away from US Treasuries as a global reserve asset. The more uninformed countries are choosing to use physical gold as a reserve asset instead of treasuries. But the world's future leading countries, like El Salvador, for example, have figured out that they need to be stacking Bitcoin instead of physical gold or US Treasuries. In the meantime, we'll continue to see trade surpluses make their way into Bitcoin via US stock indices like the QQQ, the NASDAQ 100. And I think if you're a smart individual, this is really your cue to dump your treasuries, your other bonds, your stocks, your stock ETFs, and your physical gold for Bitcoin. At least that's what I've done. In the words of the great Wayne Gretzky, if you want to be a champion, you need to skate to where the puck is going, not to where it has been. And the puck is definitely going toward Bitcoin over the coming decades. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.